this past weekend, we were able to get together with a small group of friends. Yes, it was a legal gathering. And the question of real estate came up. It often does when we meet with this group of people. And one of the guys that was there asked an interesting question. And I thought it would be something you might be interested in as well. And he said to me, he goes, what's been amazing to me is not only are homes selling fast, but I can't believe how much prices have gone up. He goes, I'm kind of concerned. Aren't we setting ourselves up for another housing bubble? So I thought that was a great question. I'm going to dive into that and share some of the latest information and some insights with you here today. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And over the past couple of months, we've touched on home prices in a couple of my other videos. I did one recently on foreclosures. Are foreclosures going to hit the market in 2021 and weigh us down and have an impact on that? And I also did one on a home price appreciation expectation for 2021, but didn't do anything specific to a bubble. So we're going to concentrate on that today. So if you like this content and you want to be notified when I put new videos out like this, go ahead and subscribe to the channel. Hit the like button below. I'd really appreciate that. So today, let's jump right into it because there are some things that are very different from before. And the economic rules at play today are kind of different than they were several years ago. So let's jump into that. So let me move myself out of the way for you here so you can see these slides. There we go. Okay, so we're going to start out here with Craig Lazar, who's the managing director, S&P Dow Jones Indices. And he brings up an interesting point. He says house prices were notably, and I'm tempted to say very strong, in September. The National Composite Index gained 7% relative to its level a year ago. Our 3 monthly readings since June of this year have all shown accelerating growth in home prices, and September results are quite strong. So if you or anyone you know has been out looking for a home, you know this is true. You know that homes are not staying on the market for very long, and you know that home prices continue to go up. But are they going up too much and too fast? So in order to answer that question, let's take a little bit of a historical perspective on this. So when we look at a compounded annual home price appreciation rate, okay, to look at what that historical average appreciation has been, if you go all the way back to 1991 and you average that appreciation out every year since then, home prices in the United States go up on average 3.8% a year. If you go back just to 2012, and the reason 2012 is that's the year that we really came out of the housing crash, the Great Recession that we went through before. And since 2012, the average annual appreciation for homes in the United States has been a very healthy 6.1%. So, how does that relate to the local markets that I work in? Well, in Frisco, Texas, year over year, we're up 10.5%. In Prosper, Texas, year over year, we're up 18.1%. And the median price in Temecula, California, year over year is up 15.8%. All very healthy, very strong, but some could say troubling appreciation numbers over the past 12 months. So to give that some perspective, let's not look at just the last 12 months and let's go back 3 years. So in the last 3 years, home prices in Frisco are up an average of 15% total. So about 5% a year, a little bit behind the national average there. In Prosper, at 23% over 3 years. So again, 7% there. So just a little above what we're seeing from a national perspective. And then in Temecula, even though we're up 15.8% year over year, we're actually cumulatively up 17% over the last 3. So you can see that the pace of appreciation in the last 12 months has been much greater than what we have seen over the past 3 years. So we're going to dive into that in just a second, but it still doesn't answer the question, are we heading for a bubble? So in order to answer that, let's go ahead and graph This historical median appreciation rate that we already identified as 3.8%. We're going to chart this all the way back to 2000. So if we look at where the average median home price was in the US in 2000, we add 3.8% to that for a year. This is our trend line. This is where we're at. So this shows what the historical average would be. Now, if we plot onto that what's actually happened since 2000, it paints a little bit of a different picture. Look right here, 2002, 3, 4, 5, 6, 7, and 8. All of those annual appreciation amounts are significantly above that historical trend line. Well, what happened? Market crashed. Bubble was created and everything dropped. And we've been running way below that line, but we've been getting closer to it up until today, right? So as I just mentioned, home price appreciation in the last 12 months has accelerated well below historical norms. Is that a reason for concern? Maybe, maybe not. I honestly think it's too early to tell because if you look back here, there's a lot of things about the real estate market in this time frame, 2002 through 2008, that didn't make a whole lot of sense. There was a lot of speculation in the market. Everybody was buying second and third homes, even, basically fog a mirror, sign a piece of paper, get a mortgage. So a lot of money was being lent out, and it was just creating this frenzy. We haven't seen that in the past few years. It hasn't been like that at all. It's been much more stable, and general economic laws have been at play on the appreciation. Let's take a look at that. So, home prices are just a factor of supply and demand. So, whenever there's high demand and low supply of any product, prices go up. Look at gas prices, same sort of thing. Well, all the way back here in 2010, 2011, there's some things right here that are not making sense. Inventory was spiking, but home prices were still going up, even though inventory was really high. Months worth of inventory was approaching 12. Okay. 6 months worth of inventory is considered a balanced market that doesn't favor sellers or buyers. When you get way above 6%, or 6 months worth of inventory, your home prices should be going down. It's a buyer's market, not a seller's. And here, as inventory went up, prices went up. Then the prices followed the inventory down. Then, as inventory went up, prices went up. That's not what normally happens. Okay. As you can see here, the trend line of home prices since then has been up, while the trend line of supply has been down. So the general supply and demand rules have been at play. Look at where we are right now with regards to inventory. If you or anyone you know has been trying to buy a home, you know that many homes are gone within just a few days or just a couple of weeks have been listed. There's bidding wars appearing and prices are being pushed up. That's all a result of supply and demand, not a result of funky financial manipulation. All right. So Lawrence Yun is the chief economist at NAR, the National Association of Realtors, and he kind of echoes this point. He says, such a frenzy of activity, reminiscent of 2006, raises questions about a bubble and the potential for a painful crash. But the answer is there's no comparison. Back in 2006, there were dubious adjustable rate mortgages that taxed many buyers' budgets. Some loans didn't even require income documentation. Today, buyers are taking out 30-year fixed rate mortgages. They have to verify income and assets. And in addition to that, 14 years ago, there were 3.8 million homes listed for sale in the US, and home builders were putting up about 2 million new units annually. Now, inventory is only about 1.5 million homes nationally, and home builders are underproducing relative to historical averages. In the markets that I'm working in, our inventory levels are down around a month, just below or just above, right in around a month. Remember, 6 months is balanced. So very, very inventory constrained markets. And if you've been on any new construction sites, they can't build fast enough. They've really lagged behind the number of homes that are needed for demand today. And the pandemic, now that the working at home phenomenon, if you like, is here to stay for most part, people are starting to realize that their existing home doesn't work for them. They need more space to work and do school. They don't have to be in the office every day, so they're moving further away from where their office is located. That's changed things as well. So, again, are we heading for a bubble? I don't know for sure. Do we need to keep an eye on this to see where things go? Absolutely. But right now, supply and demand is at play. And hopefully, with this information, it's enough to so that you and your family can decide what's best for you. And if you have other questions about what's going on in the market specific to your neighborhood and your area, please feel free to reach out. I'm always happy to share my thoughts and insights. And again, to give you the information so that you can make the best decision for your specific situation.